All right, so there's a lot that we're going to go over in this course. It is quite in-depth and detailed. So once again, I recommend that you grab your notebook, online platform, whatever, Evernote, whatever have you, and be prepared to take some notes. Just a shortcut. You always have access to come back to the course, but it's nice to have some sort of note structure for the biggest things, the biggest takeaways. And then I recommend probably going over this 2 or 3 times, whether it's doing it immediately or coming back after a month or so and checking it out, because oftentimes what happens is we learn something new and we instantly take away a certain amount of information that's kind of like profound, new, significant, and then once we start to apply that and we learn more and we grow, when we come back and read through it or watch through it again, we pick up a whole brand new set of things that we didn't realize were as important as, we didn't realize that they were as important as they potentially were, because our mind just wasn't open and expanded enough to be able to take that information in a significant way. So, like I said, yeah, I definitely recommend doing that. It's no different than a book. Like if you ever read, a book, like a trading book, a nonfiction book, let's say, and if you read it the first time and then you get a certain amount of data from it, and then information, that's profound, shapes your thinking and all that, and then you come back, after 2 years and you read it, you'll pick up almost everything will be different, right? Because you've grown past that first set of information and you'll read it, kind of like from a brand new perspective, so that's kind of the idea here. So anyways, I just kind of wanted to throw that out there. So let's go ahead and run through the topics. So how I approach risk, planning your strategy, building your strategy, revisiting market profile, mean reversion, tracking momentum, revisiting VWAP, getting in sync with your market, entering a trade part 2, using stop loss, improving our average, trade management, taking profit, mitigating common risk, getting back in, trading around news, testing your strategy, tracking metrics, and on the right track. Why trading is so hard. So it is not meant to be. This is something that I got a long time ago. I don't remember where I found it, but I printed it out and stuck it on my wall. So it is not meant to be easy to do all this. In fact, it's meant to be very hard. If it were easy, anyone could do it, and almost everyone knows what it takes, but few can actually do it consistently, and that is the challenge. When adversity strikes, even when you're doing the right things, it is not unfortunate, because greatness is not just about doing the right things, but doing them even when they cause great pain and discomfort. Weathering the tough times is the inherent prerequisite for being great. Adversity is built into the game, and therefore it's not an unfortunate setback that is keeping you from your potential. Rather, your potential is cut very short without being able to deal well with adversity. So expect great results long term, but adversity and ups and downs short term. It's got to always be about doing the long term beneficial, not the short term pleasurable. And we do not deviate from that, no matter the pressure. We relish the opportunity to be mentally tough when adversity strikes, when so many would wilt, and when it feels so unnatural to be optimistic and confident. That is the real goal and priority. Now keep conditioning. Constantly reprocess and replace any thoughts that are not in line with all of this. It will take a great commitment to unlearn old thinking patterns and instill a new way of thinking to the point of habit, and you can do it.